Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Monday, October 24th, 5:05 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. Revere Asset Management, home of the flying white horse. You can do no better in the asset management industry. State of the market. We are in a correction with a short-term uptrend. You can see over here on the trend gauge, we have officially upgraded our short-term trend from neutral to bullish / uptrend after two consecutive closes and higher closes on all 5 of the major indexes above the 21-day exponential moving average. Leaders also upgraded from neutral to uptrend. I've got 30 breakouts to review. And it's a great list to monitor going forward for the health of the overall market. If the uptrend continues, these breakouts should hold up just fine. If they falter and the indexes break below this 21-day exponential moving average, we got to regroup, retrench, and reassess the situation. First signal of green over here on medium versus the 50-day moving average as the Dow Jones Industrial Average pierced that level today. But otherwise still showing bearish slash downtrend across our medium-term 50-day moving average and long-term 200-day average for the 5 major indexes. So what happened today? Continued strength after Friday's follow-through day, really probably as best case scenario for the bulls. G6 growth didn't outperform. In fact, ARK-K was down again. Not easy to do. Kathy really outdoing herself, and not in a good way. G6, this is our in-house 6 growth ETF composite, up 0.3% on the day. S&P, volatile overnight. There was intervention in Japan on the yen and some selling of treasury bonds. But we ended up, really best case scenario, as I said, for the bulls. S&P 500 up 1.19%. NASDAQ 100 really lagging early, made a nice comeback in the afternoon. Tesla was the key to the comeback. We'll show you a shakeout pattern today on that, and undercut and reclaim. And undercut and reclaim, UNR, strong pattern, puts in a low, gives you a good point to trade against, and signals that at least in the immediate term, sellers have been washed out. NASDAQ 100 up 1.1%, Dow up 1.3, continues to lead. Mid-caps up 0.64, Russell 2000 up 0.35. Global diversified 60/40, stock and bond, sucking today compared to the U.S. indexes, and this was a lot of this was China, VXUS, very red, or red, EEM, emerging markets, very red because of authoritative Chinese President Xi, or 11 as I call him, threatening, not necessarily coming out and threatening, but he's been behind the crackdown on Chinese tech, and him being reappointed to another 5-year term, first time in history, a third 5-year term for a China president. President, right? Isn't a president usually somebody that gets elected in a country? Well, elected by his cronies, I guess. Do I sound like I don't care for communism? Is that coming through? Anyway, global diversified 60/40 up 0.23%. GROTECTION, our in-house flagship portfolio, up 0.54% as we continue to wade into the market. We'll go through the tail of the tape in those 30 breakouts that I referenced when we hit the charts. But first, let's talk about our strategy and tactics here at Revere. Basically, it's summarized as follows. We evaluate the 5 major indexes versus their short-term 21-day exponential moving average, that's the green line, the medium-term 50-day moving average, that's the red line, the long-term 200-day moving average, that's the black line. When we're trending above all 3, we are as fully committed to the market as we could comfortably be. If things start to roll over and go sideways, our stops will take us out. Good opportunities for entry points will be reduced or harder to find. We'll start locking in profits. If things really start to roll over and show signs of an accelerating downtrend, the slopes of the lines, the green, the 21-day, and the red, the 50-day, will start to roll over. This is pretty much starting the DEFCON for us. And then if you break below the black line, which is the 200-day moving average, and why is the 200-day moving average so critical? Because of this chart right here. This is the chart of the last 13 bear markets. Every one of these declines, whether they're just run-of-the-mill bear markets down in the 20% range, or if they're over 30%, severe bear markets, all of these occur once you break below the 200-day moving average. That's where the chance for this comes up. You don't know if it's going to become a bear, but if it does, this is what you have to be concerned about. On average, you start with about a 12% loss from the top by the time you break the 200-day moving average. 12% is pretty easy to come back from. However, if you're entering retirement, a 44% loss is not easy to come back from. You just don't have the time. The market doesn't go by your clock. That's what the average of the last 6 bear markets are. You need 80% to get back to even on that. Do the indexes routinely throw around 80% returns? They really don't. So what we decided at Revere, we're going to protect the downside, let the upside take care of itself based on our strategic and tactical re-entries based on short-term indicators. And then if we get to where we're back above all of the moving averages, then our strategy kicks in, which is to be fully into the market in leading stocks and indexes as long as that trend continues. Anytime we see a wave, we jump on. We don't know how long it's going to go. Sometimes it's a couple days. This one failed after a week and a half. This one failed after 2 days. This one didn't fail for 4 weeks, and we rode it up until we failed into the declining big black line here. Right now, we're riding a wave that has gone on for about 8-9 days. The follow-through day took place on Friday. This was the signal to get much more aggressive, and that coincided with a big move above the green line, the 21-day exponential moving average. Now with today's follow-up strength, the slope of the line has turned up, and it's our second close above the 21. And we continue to add exposure, low-risk entries, and continue to pyramid our profits as long as they ride. It's very possible today was the top. We don't know. It's possible when we run into the declining 50-day moving average that we might pause our top. It's possible, 3,800 is where we hit today is a significant resistance area. 3815 is a key fib area. 3900 is a big resistance area from late August and early September. If you look at a weekly chart, we actually touched the 10-week moving average today, which is at 37.97, and closed right on it. So arguably we are testing the 50-day moving average. However, it's the 50-day on a weekly perspective, which is just the last 10 weekly closes. And we've got a nice stochastic cross up today, or this week, I should say, on the chart, on the weekly chart, and that could trend for a while. It could trend for a couple days and break down, or just a week or two and break down. But it's a good sign, and that's all we're doing is weighing the evidence, good versus bad, good charts versus bad charts, accumulation versus distribution, downsloping trend lines versus upsloping trend lines, number of breakouts versus number of breakdowns, highs versus lows. All math driven here at Revere. If you're interested in this approach, give me a shout. Don at revereasset.com. You can also email Dan at revereasset.com. That's Danny Stewart, Revere president. He's a CFA, Mr. A to Z when it comes to all things financial. Or you can call 855-REAL-WEALTH. That's 855-732-5932. Join the multitudes of people that are flocking to Revere as our common sense approach. And downside protection and upside participation, that's GROTECTION. It's working, folks. It's common sense. Give us a shout, give it a look. We think you'll like it. Moving on. So there's the S&P 500 with the second day up today. Let's look at a 5-minute chart here. Here's what I liked about it. The key about 3730-ish was where we started accumulating our UPRO. 3710 was the 21-day moving average for about the past week, and we were trying to get above it, and we failed several times. And then Friday, I pointed out on this 5-minute chart, we got above it early in the day, failed, got above it again, pulled back, and held. This is a very, very key area to the chart right here. The low here around here, 3,700 held. We were battling right around that 3,708 area, which is where the 21 was at the time. And it held and it took off to the upside. Then we got another gap up today, up to 3,800, which is another resistance area. Started to pull back. Was this going to be just another bull trap? No, we stopped at 3740, which is above Thursday's high, above Friday where we broke out. It back tested. We just barely got into, and we stopped going down at this prior high before we closed the day on Friday, this 3743. So every time you pull back and it holds, these become key resistance areas, and really what we're doing is just stair stepping higher. And as long as we continue to stair step higher, we'll keep putting money to work. If we start to break down to some of these areas, we'll reassess. But for now, we started with the gap up to 37.97, down up to 37.97, down, making a higher low, making a higher high into the close, pulling back and closed right at this 37.97 area. So this is a pretty key area. Oh, it just so happens that 37.97 is the 10-week moving average to the dollar. If you look here, 10-week moving average 37.97. Is that just a coincidence? Technical analysis is voodoo and it doesn't really work, and it's snake oil. I hear it all the time. Those people can kiss my you-know-what. So anyway, there's the S&P 500. Let's take a look at the NASDAQ 100 with a second higher high today, and the 21-day exponential moving average turning up. All good signs. This has been the lagging index going all the way back to the beginning of August. Started lagging as we approached the top, never quite made it to the 200-day moving average before it rolled over, made lower lows. But again, we continue. We're in this 9-day rally off the low, 3, 4, 5, 6, 7, 8 days off of the low. Second day up, 2 closes above the 21. That's what we want to see. Let's go to the Dow Jones Industrial Average. Well, looky there, a move above the 50-day moving average and a close above it, actually putting 1.4% above the 50-day moving average. You go, Dow. You know I talk trash on you when you're underperforming, but Dow is leading this move higher. Now, there's a theory by a very smart economist that I follow closely named Martin Armstrong that says when the Dow leads, that's the sign of international money flowing into the United States, into the big blue chips. The Dow leading very often is a signal that the market is pulling back when you lead on a relative strength basis and price isn't quite keeping up with the relative strength line, but that's not the case now. This is relative strength and also price strength. And I've heard him say that theory for years. I'm going to his next World Economic Conference in November. You know I'm a big fan of his, and it's just because some of the things that he discusses and his Socrates artificial intelligence computer is eerily correct about some of the things, some of the cycle work that he does. And so not really causing me concern that the Dow is leading from a relative strength and a price strength perspective. Let's go to mid caps, MDY. MDY second close. Remember, this was the first one that had two closes above the 21 last week, 2 closes above the 21 again Friday and today. Good stuff there. Is lagging on a relative basis. You can see the line there. Since midweek, small caps and mid caps have been lagging. Here's IWM. two closes below the 2 closes above the 21 there after failing last week. So failures turning into successes. Again, all we're doing is putting check marks in the plus column and removing them from the negative column. We're taking our clues from price and volume. So that's the 5 indexes. Let's take a look at the VIX, as this is something we're tracking closely. VIX, 3 closes below the 21-day exponential moving average now, and it rolled over. It did close higher on an up day, which is a negative divergence, but you can see there's still more room for the stochastic for this to run lower. If this is going lower, the indexes are going higher. Third close right around, second close below 30. It's a positive. It's what we want to see. Let's go to the dollar. The dollar was initially a headwind today, turned into a tailwind, ended up being about neutral, closing right on the 21-day exponential moving average. You can see I got up a bunch of alerts set over here. Stochastic hooked down on the dollar. That's a technical positive sign for stocks. Let's go to TLT. This is the 30-year making continued lower lows, which means long-term interest rates are making higher highs. Let's go to the 10-year yield. The 10-year yield pulled back today, didn't complete that evening star pattern that I talked about, but still above the ADMA as it got very extended above the ADMA last week. We're looking for this to continue to pull back as a benefit to stocks. Let's take a look at GLD. Down today, near lows, no reason to be in gold when it's underperforming stocks. And then let's go to Bitcoin, BITO. You can't really see this because it's so flat on the daily chart. So let's bring up a 60-minute chart. You can see this is in a very tight range here, and you can see I've got alerts set. A break above this 1250 area basically will be a break above 20,000 on Bitcoin, and then we'll see. For the first time in a while, Bitcoin is less volatile than the S&P 500. And then so you can see this false breakdown in Bitcoin. This also occurred with the false breakdown in the S&P 500. So for now, they're confirming each other. So Bitcoin, look for BITO to move above 12.5. So those are the big indexes that we wanted to take a look at. Let's bring up the tail of the tape. No, before I forget, let's look at Tesla. Let's take a look at what a false breakdown looks like on a 5-minute chart. So first we'll go with the daily chart. So Tesla made lows last Thursday. The low was 202, moved up higher on earnings. Not the best reaction to earnings. Down on Thursday on earnings, 6.7%. Tried to reclaim some of it on Friday with the follow-through day. And then over the weekend, Elon said they're cutting prices in China. That's apparently due to declining demand. Tesla gapped down. The key numbers here are 202 and 200. The way technical analysis work, a lot of people had their stops at that area. First of all, the lows of the last 2 days. So the low of Thursday was 202. As I said, that was the gap down on earnings. We tried to rally. We faded into the close, tried to rally a little more on Friday, gap down today on that news. And keep an eye on the volume here. Look what happened when we broke below. Here's the line for 202. When we broke below, you can see the big volume spikes here. This is all the stops getting triggered. And then it puts in a bottom, puts in a hammer, reclaims 200, the Livermore undercut and reclaim of 200, and then the undercut and reclaim of 202, the big shakeout area, and then continued higher. Now make the decision, is this just a knee-jerk reaction? We're going to base for a little while, and then we break above 205. You can see 205 was a key area over here Friday, the low, and for a little while in the morning on Thursday, the earnings day. So natural to pause at 205. Now we go up again, then we back test 205 and hold it. Very good stuff here, and then a nice rally into the close. So basically a hammer candle on the day for Tesla with a shakeout below, two key areas, getting back above this 205 area. What you want to see now is to get above this next alert that I have here, which is the high of Friday. Thursday, the earnings day. And the question is, I think the blackout ends today for Elon Musk. I believe that he said he's done selling. I don't know that for a fact. I've seen both things reported. Basically, when he sells, he does it in a very sloppy manner. I'm saying, does he have to sell to raise money to close the Twitter deal, which is supposed to be closed by the end of the week here? If he does, you're going to see Tesla trading really badly tomorrow or going into the end of the week. If he's done selling and he has the money and Tesla breaks above the ADMA, the high of Thursday, Friday's high, and the ADMA, and starts to rally, that's a good sign for Tesla. And you've got a good area to trade against here: 205, 202, 200, and then the low of today. Those are key levels to watch on the downside to see how it reacts there. Particularly, I like that 205 area. The shakeout areas were 200, 202, and the low of today, 198.59. And then we want to get above this declining ADMA would be the next level in the upside, plus those two highs. Closing the gap from Wednesday when it gapped down into Thursday is also critical. A lot to see on this chart here. Pretty obvious what some of the levels are. You can see here's 205 again, all the way back last week before this gap up, and then another gap up that reversed. But some mess to get through here. 225 from this chart would be a key area. And we just take it day by day, see how it goes, measure your stops. Again, you're using your risk and those levels to the downside. Also had a hookup over versus very oversold. Last time we saw something like that was here. We rallied from 265 to 318. We also saw it here. We rallied from 200 up to 264. Stochastics combined with price action and support and resistance levels can really benefit you. So that's my take on Tesla. So let's go to the tail of the tape now. We got to get through this because we've got 30 breakouts we need to look at. Technical action. We also, the NASI RSI, I'm not going to show the chart, but dollar NASI on stockcharts.com has hooked up both the, late last week, both the RSI and the NASI line itself has hooked up. So that joins the indexes and the G6, not ARK-K though, but most of the G6 with their stochastic hookup. Put call, we want this to stick around this 0.9 to 1.1 area. VIX 29.85. Again, we talked about how now 3 closes below the 21, but still above the 50 and 200-day moving average. Fear and greed up again for the third day in a row to 48. That's neutral. We're off the bear case into the bull case now with the follow-through day. And the second day, 2 closes on all 5 of the indexes and leading stocks participating. We're on the bull case now. To get back to the bear case, we'd have to have a break of the 21 and really a breakdown back below 3,700 to negate this breakout. What to watch this week: Tuesday after hours, Tuesday meaning tomorrow, big tech earnings, Microsoft and Google, and then Thursday after hours, Apple and Amazon. This is going to dictate a lot about the continued health of the market. They're going to report. When they report, they'll report on business findings, they'll report on currency, inflation, sales, retail. It's just those 4 are going to give us a very good outlook on the economy. So we went to day up 1 to day up 2. Why do we count this? Once you get to 3, if you're piling in on day 3, it's a mistake. Just let me put it that way. You want to start getting in on day 1 up, adding on day up 2, and that's what we did on those 2 days. Don't want to add a whole lot more unless it's extremely low risk pullbacks. We were very volatile overnight. As I said, there was Japanese, I don't know if I said it or not, there was Japanese intervention, and then President 11, or Z with his third term, crushed, and I mean crushed, China Tech. Look at K-Web, down over 14%, and that's with a hammer. Look at Pinduoduo, down 25%. This was a former leading stock, failed breakout. Pay attention to failed breakouts. They fail for a reason. At this time, it was because the market was in a downtrend and breakouts weren't working, but relative strength continued to decline, and then you get what you get today. Shame. I really feel for the people over there. The leadership are just bad people. Don't know any other way to put it, and I hate to say that, but The truth hurts sometimes. So expectations coming into today, positive based on the Friday follow through. We got that, more strength, 30 plus breakouts. I stopped at 30 because, well, this video can't go forever. As far as the support and resistance levels on the S&P, higher versus this level, but we reversed into this 3,800, 3,815. We know that's where the 10-week is. There's a fib there. The 50-day is higher, but the 10-week is in here. As far as the NASDAQ 100 goes, we cleared this resistance 1 level. Next up is this fib level, 286.82, that we'll be keeping an eye on. Here's the intraday action. That nice base inside where we pulled back was good stuff. The way we closed, and look at this 37.97 all over the place here. The ranges for the opening range, always keep track of the opening range. Okay, so what sectors were good today? Aerospace, banks, and defensives, financials, industrials, staples, utilities. Real estate started out strong, faded. The Danny Stewart real estate short is still profitable. On the weak side, bonds, K-Web, gold stocks, emerging markets hammered. That was due to China. Solar down, coal down, biotech down, cloud stocks down. Focusing coming into today, Wolf. Wolf got a big upgrade pre-market. It was up 6-7%, and sometimes you just sell into these. I didn't expect this. Doesn't matter what you expect. You have expectations, you don't have predictions. I do anyway, but gapped up. This is silicon carbide semiconductor, but it was sold. Is it sold because earnings is coming in 2 days and people are just a little worried about that? Maybe. You don't really know for sure. But what we do know is that Wolf had a big upgrade. It was euphoric pre-market, up 6-7%, and it just, look at this 5-minute chart on it. Upgrade, and that's it. Top tick within the first 10 minutes, and then break back below. At least it based for most of the day after it gave that up. Maybe it's just a seller that, maybe it was just one seller. I don't really know. We'll have to see what happens when they report earnings in 2 days. So that's not a good sign. And then what else were we looking at? Oh, our breakouts holding. Well, I've got 30 of them that say for the most part, yes. And then of course we're watching the indexes, the VIX, the UUP against their 21-day exponential moving average. So what we buy today, we added more UPRO on the strength after that pullback held that 3730 area on the S&P. We'd added 2 more 2.5% positions, so now we got 15% in UPRO. That's the equivalent of 45% on the S&P 500. We want to get up to 20% of that. And I'm going to talk about this tomorrow. Revere math. UPRO plus T-bills equals SSO. That'll probably be the title of tomorrow's video unless something significant happens. So what did we buy today? We added 2 oil stocks that were giving nice pullbacks. STNG, we've been talking about this for a while. It's in the 21/21. Big volume on this move up over the last week and a half. Lighter volume on the 4-day pullback. Undercut, reclaim the ADMA. Also, that's the 4630 pivot here. Touched 46 today and bounced off of it. I see the stochastic rolling over. I'm aware of it. That's why it's only sized at 2%. But this seemed, based on the volume patterns, I couldn't turn it down. I see that they have earnings in 8 days. I'm aware of that. And then LNG, been looking for a low risk entry on this. And again, this has been going sideways for a while. Stochastic pointing down. Big volume on the accumulation here. It's been basing for the last 3 weeks. It undercut and reclaimed the 21. That was when I bought it. We're down very tiny on this, like about 50 cents or so. The sell on it is a break of the 50-day moving average. What I'd like is get a nice bounce on this into earnings, and then we'll make our decision. This is also only a 2% position. So that's what we bought today. Up the beta from 0.53 to 0.75, so basically 75% of a pure S&P 500 portfolio is where we're at when we get above the 50-day moving average, or we'll add heavier. Until then, it'll just be low risk entries getting up to, but not higher than, a 1.0. Bottom line, continued strength after Friday follow through day, 30 plus breakouts. Big area of resistance here, this 3,800 to 3,815-ish area. It's a fib. It's that minus 20% year-to-date level. We got to see what happens if we attack it again tomorrow. Now let's go to 30 breakouts. These are 30 stocks that either broke out before or on the follow-through day or today. They're sorted by price change today. And basically, this is the list to concentrate on. What are you going to see in this? You're going to see a move that's obvious on the chart above, not necessarily a pure pivot, not necessarily a perfect cup and handle or double bottom, but you're going to see a breakout above recent resistance. And it either happened before, the strongest ones were before the follow through day, but quite a few of them just in the last 2 days. So Axon, this is the former Taser. And my guess on this, if I had to have an explanation, it's in preparation for riots after Republicans win at the ballot box next Tuesday. And don't think that that's not a possibility. AutoZone, all the auto parts stocks have been showing relative strength. A few of them broke out today. AutoZone is one of them. AEHR, we own this, broke out early, and very clear leader, number one in the market. Vertex broke out today. Reports in 3 days, though. O'Reilly, here's another auto parts, broke out today. Elevance broke out last week. Relative strength at a new high. Don't know a lot about this one. CCRN, this industry has been acting well. Commercial services staffing, because employment's holding up. This broke out before. Eli Lilly broke out today. Strong move on Friday. Earnings next week. Steel Dynamics broke out on its earnings report. 3 higher highs after that. That's just strength. HLIT, we own 1A and 1B along with AEHR, made a higher high today. We're long that. Cigna broke out today, and also Friday, a lot of the managed cares made higher highs. Molina, another one being one of them, broke out there. Cardinal Health broke out on Friday. WWE continued strength, but a reversal today. SAM broke out Friday on earnings. Northrop Grumman broke out late in the week, but really made its move when Lockheed Martin reported and broke out. Lockheed should be on this list. I don't know if it is or not, but so it's at least 30 plus breakouts. But Northrop keeps going higher. Reports later this week. ExxonMobil breakout. Here's Lockheed. I do have it on here. Look at the move on that. 5 days higher high since its earnings report. That's rare. Hess broke out, showed strength beforehand. LHX, another aerospace stock, showing strength. Earnings at the end of the week. That 250 is a big area. Texas Roadhouse broke out, struggling a little bit at the pivot here because it's got earnings in 3 days. Interactive Broker breakout earlier last week on earnings before the follow-through day. CMI broke out on Friday. It hasn't had earnings yet. Dino, not Dino, Dino broke out, showing some issues at this 60 area here, but very clearly a leading oil stock. ELF stands for eyes, lips, and face for the ladies out there. Broke out before the follow-through day. Booz Allen, another staffing stock, broke out beforehand. Earnings at the end of the week. Deckers broke out before, just hanging right around that 359-ish pivot. Health Equity broke out on Friday along with the follow-through day. Netflix, you know this story. Didn't have a great day today, but gap up on earnings, inside day, follow through to the upside on the follow through day, inside day. So far, so good on that. That's our largest position. Sting, we added this today, broke out before. And is that 30? I think it is. That's 30 stocks to monitor. Keep your fingers. So anybody saying that there's no strength in the market, nothing to invest in, I disagree. And I think those 30 stocks prove it. That's going to wrap it. As always, love to hear from you. Don at revereasset.com. 855 Real Wealth is the phone. Wrapping up Monday, 10/24. This is Don Vandenbord reminding you it's not how much you make, in the market. It's how much of that you can keep. Protect your downside. The bull markets will take care of the upside, and you'll sleep well at night. Wrapping up Monday, 10/24. This is Don Vandenbord. Just the facts here at Revere. That's it. No opinions, just the facts. Thanks for listening. Have a great day.